We're coming to you live from our studios here at MS24. Welcome to MS Base. My name is Kwabena. We are coming up. Bank of Ghana maintains policy rate at 14.5% for the fourth consecutive time. Now to the details, the Monetary Policy Committee of the Bank of Ghana has maintained the policy rate at 14.5% for the fourth consecutive time this year. Addressing the media, Governor of the Central Bank, Dr. Ernest Addison, noted that reduced inflationary pressures coupled with improved macroeconomic conditions informed the committee's decision to maintain the policy rate at 14.5%.
The committee noted that inflation has eased following the spike to 11.4%. At 10.1% for October 2020, inflation is almost at the upper band target. The fiscal and monetary policy measures, which have increased liquidity in the economy, appeared not to be impacting inflation, partly due to the assistance of the output gap. As a result, the committee expects these conditions to support inflation to return to its central path by the second quarter of 2021. To conclude, the committee noted that macroeconomic conditions have generally improved relative to conditions at the time of the last MPC meeting in September 2020. Global conditions continue to be supportive. Domestic inflation is easing. Growth prospects are improving. Crude oil prices have stabilized. Monetary aggregates have expanded, but with minimal impact on inflation. The current account deficit is stable. Remittance inflows has remained firm. The exchange rate has been stable, and reserve buffers continue to remain strong. The key risks are the evolution of the budget deficit and the financing needs to support budget implementation and the uncertainties surrounding the pandemic. Under the circumstances, the committee decided to maintain the policy rate at 14.5%.
Let's stay a bit longer on the governor. Governor of the Central Bank, Dr. Ernest Addison, has justified the recent spike in Ghana's public debt stock. According to Dr. Addison, the increase in Ghana's public debt stock can be attributed to the COVID-19 alleviation programs implemented by government. He, however, expressed concerns over government's ability to continue these interventions in 2021 as the country's debt stock hits unsustainable levels. Dr. Addison was addressing the media after the 97th MPC meeting here in Accra.
The policy rate go down, which has impacted on short-term interest rates. But this has also occurred at a time that there has been a lot of pressure on government to, put into place measures to mitigate the impact of the COVID. So necessarily, the government's demand for financing during this period has gone up. And this is what accounts for the longer-term interest rates remaining stubbornly high because of the high financing needs of the government. And the benefit of those interventions, all of you are witnesses to that. I mean, all of these things demand money, and they have to be financed. And we are financing them through the issue of bonds. So this is why you are seeing the interest rates on the longer dated instruments going up. And this is what accounts for the debt stock rising to 71% of GDP. So in a sense, one can justify why the debt is where it is. The important point, I think, is whether the government will have the same fiscal space to be able to continue providing these supports in 2021, because really we are getting to the limits of what the government can do.
Now, away from that, former finance minister and the NDC, Seth Terkper, has chided the ruling government over failure to allocate portions of country's oil revenue to the Ghana Infrastructure Investment Fund. Seth Terkper explained that the fund was set up to cater for the country's infrastructure needs. According to him, the current administration has failed to allocate portions of the oil revenue to the fund.
The Ghana Infrastructure Investment Fund, 25% of ABFA was supposed to go into the Ghana Infrastructure Investment Fund. We started funding it together with the increase in VAT from 15% to 2.5. The entire that that 2.5% was supposed to go exclusively into the infrastructure fund. And the reason is quite simple, the rationale. Ghanaians started complaining, we are not even seeing the oil revenue, we are not seeing its investments. It's not that you are not seeing it, but it is spread thin, over so many projects. And that is because over time, ABFA, the 70% that should go to the capital budget, had come to represent virtually the capital budget. So it was decided that why don't you create the true sovereign wealth fund, which would leverage the markets for commercial projects. And that is the Ghana Infrastructure Investment Fund, which is similar to Temasek, to Dubai Fund, and to all those things that do the real infrastructure. It's not up to Ministry of Finance to use the sovereign guarantee approach, all the time. In short, we started putting money in. We also put in 250 million, if you remember, of the 2014 bond to set up a seed capital. I can assure you, and for sure, that since 2017, no oil revenue has gone into the Ghana Infrastructure Investment Fund. So all spending that is coming out of the infrastructure fund is from, the mills, from the Mama administration.
It's time to look at the performance of the cedi against the major trading currencies. We begin with the US dollar selling at 5 cedi 71 pesos, with the same figure for the buying price. The pound sterling pegged at 7 cedi 59 pesos, with the Japanese yen selling at 5 pesos. Now let's shift focus to the commodities market. Gold selling at $1,829 per ounce, with cocoa pegged at $2,753 per metric ton. Crude prices pegged at $46 per barrel. Of course, these are the figures to rely on for those within the financial sector. But that's it for MS Breaks. My name is Kwabena. I'll keep watching MS24.